Alright, we back once again here late night. I just got done watching March Madness, so I thought I'd come in here, check out the SPY Gex charts. It's been a while since I've done a video. We were tracking Tesla for a long time, but I kind of got bored with that, so sorry about that. And then I got bored with that mainly because I just wanted to actually just trade instead of just look at everything and be an analyst. So went into trading for a little while. Probably going to get back into doing a little bit more of the reads of the videos for this week. And mainly because I'm close to beating my funding challenge, which is taking me a lot longer than it should have. But learning more about this Gex, trying to put together a three-dimensional kind of 360 view of the market with some other ideas, indicators that I use, but I wanted to focus mainly as my bread and butter, learning the Gex charts. It has been working like a charm, and if you understand how to read it, a lot of traders out there are super excited when they get started and as they go on to look at the charts. When I was a kid, looking at trading charts got me excited just because it was something cool. The lines, the colors, like laser beams, going across the screen, and fireworks and stuff. So it's exciting to look at an actual chart. But this right here, having an understanding of this type of chart, gives you I don't even know. It's more of like a four-dimensional view of what the market structure is like. And so, without further ado, let's kind of go through just kind of a basic read that I would do. I don't know if this is the correct way to look at everything, but I sort of would lay out the different charts that you can get in this Discord. The first one being the net gamma exposure, looking out 98 days to expiration. What I love about this chart is it kind of gives you a pretty decent view of the market going out 98 days as far as timing. And what I'm going to explain to you on this timing is you've got these different gamma exposure levels, and we've talked about this in other videos. So if you go watch the series on reading Tesla to see kind of how we use these levels, but we've got the different gamma levels. The first thing I want to look at is what stands out, and this is just what I see. There's probably a lot more that other people would see once you understand the chart, but what I see is this level right here stand out, this 465, and mainly because we've got this May 20 gamma exposure kind of sticking out here. You can see on each different level that amount of gamma exposure at these different levels are quite a bit lower, and I'm sure we could do that with each different expiry, but it's pretty clear that these expiries are kind of clustered here, and you got a little bit of cluster here, but looking at these expiries, we already kind of know the levels into the future for these closer expiries. We obviously got to move to 455, kind of clean this area out, sort of looking at it like I would trade a volume profile, which this volume profile is so good for your chart, by the way. So I would definitely highly recommend learning that. But this is similar. You're looking at a standard distribution of gamma, and so with the understanding that gamma sort of acts like a magnet for price, as the market makers have an incentive, especially when you're above this vol trigger, have an incentive to move the price towards that level by that expiry. That's the idea. Their whole goal, and my whole underlying premise nowadays is just the market maker, the market is wanting to pin if you let it. Essentially, if the participants of the market or the timing or the flows allow for it, the market's going to take the opportunity to pin to a level. That's my thinking. So I always start with that assumption. What could break the pin? Because the pin is probably the most likely scenario, just based on statistics and probability. In my head, that's how I think about it. But so what I'm looking at is here, by obviously the end of the month kind of coincides with end of month flows. You got the beginning of the quarter coming in. You've got the JP Morgan caller, which don't even try to get me started on that because I have no idea what I'm talking about. I just know it's an important date where a lot of flows are going to be moving because they got to hedge against this giant collar that JP Morgan puts on the market. That gets rolled over on the 31st. So we have a pretty high probability of closing in and around this 455, 456 level as of right now, like as of this moment. And so this is what I would base my entire trade plan around, is looking at where the most likely scenario is for the next 3 expiries. And then we look at for other anomalies, does this fit in with kind of the further down the line expiries? And so we're looking in, again, this brings me back to this green blotch here where you've got this May 20. This sort of tells me that, okay, by March 31st, likely to pin 455, 456 or somewhere in this area here. This will obviously shift. This is just a snapshot. Then it's reasonable to assume if we move into this area by March, then by April, likely to start moving into here. Let's look at these different colors and stuff. We can start seeing that getting built up here. See the orange, sort of this middle range here getting built up. So that leads me to assume that, coming in and around April in these areas, we should be touching around 460, 462. That kind of makes sense. That's always been a level, 462. And then 465. And why I say 465 again, because then we got that gamma exposure kind of sticking out by May. And that's right into essentially the end of the quarter. So thinking out, end of the quarter, 465 target at this point. By end of month, 455, 456 pin. End of quarter, we close in at around 465. That's sort of what I'm thinking. Just by looking at this chart, as long as we stay above this vol trigger the whole way, they've been moving this up, moving it up, moving it up. It was 442 at one point. It moved to 443 intraday, went to 448. This vol trigger acting as support for the market as it kind of grinds higher and kills the bears, which is what has been happening essentially. Every time you try to short a low, you get completely V-shaped recovery. And so ignore all these other lines. I don't pay attention to those just yet because I'm not sure how I want to fit them in. So that's this chart. Moving on. I've been trying to wrap my head around this still, so excuse me if I explain this incorrectly. I'm finding out the more I do this, the more people out there that actually understand this really well. So there's a lot of good resources out there to understand how to read this. Other than myself, I'm sort of just kind of like I've just got a YouTube channel about it is all. I'm not some kind of, I'm not Jam Carson or any kind of market maker or anything. This is just how I read it. And so with this, I'm looking at the delta exposure, which is going to be the hedging exposure on the market makers. Not necessarily where they want the price to go, but where they're hedged against. So which levels do they hedge the most? Sort of acting like a floor, effectively. This would be like a support. So instead of predicting where price is going to go, I can look at how hedged and at what expiries are these levels hedged, and what's the balance too is what I'm thinking of as well. So like for example, 440, you've got a call side balance here, advantage towards that, and you can kind of start looking, seeing if you got any more anomalies for expiries, like something like this, where you've got some hedging going on here at 455, again aligning with our other chart, but that's out for July, so they're hedged there, and then you got pretty big balance here. They're delta hedged at a higher rate here at 450, just because that's where we closed, and so that makes a lot of sense too. So being hedged on the call side, favoring the call side, I would say would be more bullish. It's not terribly bullish, but it is SPY, so you're going to have a pretty good distribution in general, but a little bit leaning towards the upside for now, which again lines with our theory. 455, 456 pin is our starting assumption going into the week and into the end of the quarter and into next quarter, essentially. So looking out as far as we can, just using just using I don't know, just using as much logic as possible from what we understand. Because again, I could be reading this totally wrong, but until it doesn't work, I'm going to continue reading it like I do because it's working. Whether it's working because of what I'm reading, but whatever information is being derived is being applied in a way that is working on a consistent basis, which is all you need in trading, is just have an edge. So whatever that edge is, continue to use it. Again, our first expiry coming up here, so that's going to be this Monday. Now that we've kind of looked at the overall picture from a top-down analysis, we're going to look at where the nodes are essentially for gamma, and our big areas here, obviously max pain 445. That, if you traded last week, you understand how big of a deal 445 was. So again, that being max pain makes sense. So you can see a lot of put gamma there. So if we do head to the downside, very likely we tap 445, but that would have to come under 448 first, which anything into 448 very likely to get bought at this point, unless we see some change in these GEX numbers and things like that. Again, looking at this total GEX 35 mil, and then you got GEX amount for gamma exposure amount for Monday at 87.5. Long-term non-volatile, meaning both of these are positive. That just means that right now, assuming SPY is going to be non-volatile, I mean it's going to be kind of sort of just a buy the dip scenario, at least for Monday. Okay, so we've got our top down, we've got our quarter look, we've got our next week look, and now we've got our Monday look. And our expected range is about 10 points, so we can definitely hit 456 on Monday on any, basically on any dip. Target 456, 455, at least going out to Friday, I would say, is kind of the way I would look at it. Okay, if you wanted to play short-term options, that is. I'm not going to go over any of this, mainly because I know what this is meaning. I don't exactly know how to read it yet. I don't know the definitions here, so when I do find that out, that'll definitely be helpful to know the IV rank versus the historical volatility rank. So I'm sure someone out there understand how to read that right away. But obviously you can see put volume is still high. I think this is still carryover from OPEX, so I'm not sure this is a leading indicator coming into the future. As long as we're still above this 448. If we get below 448, I would definitely start looking at this as more of not hedging or lag from OPEX, more of a leading indicator. So that's Monday. So here's our picture for Wednesday, and you can see that the expected range changes. It gets wider, obviously. There's a wider expected range when you add days to the time to expiration. So then you've got the two vol triggers as well, 448 still coming up. So obviously that's going to be a huge deal. You can see that vol trigger comes at the end of this node here of gamma exposure. Again, we're still at 455 as our target pin. And then I'm starting to do this like a weatherman or something. And then on 331, our forecast is showing 455 and 450 coming in here. Vol trigger 448 stays the same. Not a lot of turbulence expected in the future here. Same thing, long-term, non-volatile. Again, we got the big exposure actually that sticks out here on Friday. More gamma being expected on an expiration day of Friday, so expected range didn't even change that much from Wednesday. If you can see, 61 to 45 and then 61 to 44, so they just added $1 to the downside, and that makes sense because they put this this little node here. So a little bit of put exposure built up there for Friday. So expecting volatility actually, but not much. It doesn't look like there's a lot until they can take out these vol triggers. So what I would do is going in, I take all these, I'll put them into this little sheet here, and now I can reference them back without having to keep my windows open and stuff like that. So I can kind of look at them again on Monday, run the same things, and do another read of it. That way we can see the differences of every single one of the pictures, and then you can just have a basic chart set up. You don't need anything else. If you're just using this Gex method, you don't need any other charts that show anything else. You basically can just come in here and just mark the levels. Like say, let's go to SPY. This is what I would normally do. Just mark the levels that are important. 448. 448 would be our vol trigger, and then we also had some other vol triggers in there. 439, 443. And then once you have these levels up, now you can start paying attention to things like options flow and volume and dark flow, and going, okay, now that we have our levels set up in the options arena, we have our plan set up for the options arena. Here's our pin. We know 455 is the most likely to get tagged. Double top. Do they create a triple top? No idea. It's possible they bring it in here and grind it sideways into OPEX, which would probably break us higher. OPEX will probably break us higher, unfortunately, because I'm a bear and I hate this grindy melt up stuff. Anyways, so 455 is our target. I'm not going to put it exact, but I would just do something like this, and you got an expected range of like, let's just do this real quick. Did I say 431, 444? All right, so you got an expected range of something like this. 461 for the entire week. So now you have essentially your gamma picture set up for the next week for now, in context of the entire rest of the month, taking into account end of month, and then into the next quarter as well, taking into account as much as we can the end of quarter situation, which our end of quarter target would be that 465 on SPY. I don't know how it gets there. It might be some volatility and turbulence along the way, but eventually, as long as that picture stays the same, that's the most likely scenario, is it ends up just getting up to that 465 end of next quarter, by the end of May probably. Anyways, hopefully this video helps. I know it's a longer one, but I thought it would be cool just to kind of show you guys where I'm at with this. And if you guys are interested, there is my Discord in the description, and also the Discord to be able to run charts like this is from Investors Haven. A lot of great resources in there how to learn this stuff. The guy that created it is in that Discord, so definitely hook him up with questions, bug him, because he's willing to teach. And if you guys have anything else, let me know in the comments below, and subscribe. We'll see you next time.